Welcome to the STR Data Lab.
Hello and welcome to the STR Data Lab. I'm Jamie Lane, Chief Economist at AirDNA, and I'm joined today by Jonah Hanig, the CEO of Rove Travel. Jonah, welcome to the show.
Thank you. Thanks for having me, Jamie. It's Jonah, by the way.
Jonah.
All good, all good. Yeah, super great to be on.
So I sort of been digging into Rove Travel and sort of the lead up to this podcast, and really interested in sort of digging into like luxury travel, the New York City market. I feel like there's been so much interest around these type of listings, sort of moving from short-term to midterm, and just operating in sort of the New York luxury market, I'm sure is sort of fascinating. But before we sort of dig in, maybe we could start with an overview and sort of brief origin story of Rove Travel and how you put it all together.
Yeah, absolutely. I'd be more than happy to share the origin story, and then we can dive into our business and the luxury segment. I'm sure there's a lot to talk about there. I'm originally from the Chicago suburbs. I went to Columbia undergrad in New York. That brought me to New York City. Loved New York. I ran track and cross country Division I, and I started my career as an investor, but I always wanted to start a business. I started a different business, a software business, a B2B software business, went through Y Combinator, raised venture funding for that. And then the pandemic hit. And so I had moved to San Francisco with with co-founders of my previous business, and was traveling around Southern California during the pandemic. So basically my co-founders and I and a few other friends, we decided we didn't want to, there's no reason for us to be in San Francisco and Northern California because we could work from anywhere and, couldn't see a lot of people. So we decided to go down to San Diego and Los Angeles. And, I was basically living out of Airbnbs for several months. And I was just really inspired by my experience. Specifically, I had some properties I stayed at that were awesome and some properties I stayed at that were terrible. And just, it was really a mixed bag. I learned a lot about the market because I spent a lot of time just looking for properties for my friends and I to stay at. We got some amazing deals early in COVID when, kind of the world was falling apart and no one was renting properties. And my friends and I were like, well, we don't need to be, home. We could be in San Diego. So we definitely took advantage of that. But yeah, I'll try and be quick here, but basically some of the properties were better than photos. Some of the properties were a lot worse, mislisted, maintenance issues, bad hosts, Airbnb customer support issues, just various different challenges. And I got really excited about building a brand or a marketplace for luxury home rentals from that experience.
So, and you see a sort of opening in the marketplace of how to sort of build consistency across short-term rentals. Like it's a problem that an Airbnb has dealt with for years, right? Of like, how do you differentiate between great properties and okay properties? And like the review system typically isn't very good because like everyone gets a 5-star review, and like just because it's got a 5-star review doesn't mean it's like actually a great property. So how did you, and as you were starting your business, think about how you were going to differentiate yourself?
I think what you just said is spot on, that there's no brand standard on Airbnb. I think it's a fantastic product, and that's why it's a $70 billion company. But like you said, you can stay at a tree house or a trailer park that has 100 5-star ratings because it's a good value for the money. But that doesn't mean it's a luxury property. And so, basically what I tried to set the definition around was, if you're comparing the property to, a luxury hotel, the Four Seasons, Ritz-Carlton, Amman, like, is this a property that you would consider over those, luxury hotels when, it's going to be priced around the same price point if you're looking at properties that are, let's say, $1,000 a night. And so, especially given the price point of New York City, obviously there's a little bit more variance, meaning like you can spend $1,000 a night and get a property that's not as nice as the typical Four Seasons, but you could also spend $5,000 a night and get a triplex penthouse in Tribeca. So it just the New York market varies a lot, but basically, started off with really evaluating the properties themselves before we partner with an owner.
What markets did you guys start in?
We started in New York, and from there we grew to several other markets. We're now in the Hamptons, Southeast Florida, Miami, and Aspen.
So something that someone mentioned a few podcasts ago was this notion that expanding markets sort of increases the complexity of operating, not linearly. Like adding one more market doesn't make your business twice as hard. It's almost like exponentially hard. Adding one more market makes it 4 times as hard. Adding 3 more markets makes it like 9 times as hard. How have you seen like the added complexity of adding additional markets sort of change the business? Or have you seen it and it's relatively easy to go into multiple markets given the type of properties you guys operate?
Yeah, I would say it's a little bit of both. So I think a mistake we made early on was expanding to too many markets too quickly. So that was a mistake, and it did increase the operational complexity. But I think for us, at least in the way our business is driven, we're not like a typical property management company where we're not, I think our business model is a little bit similar to Evolve, where we're not necessarily handling all of the property maintenance challenges that an owner might have. But our value is really compared to, especially and we'll get into this in a little bit, especially in the midterm markets where a lot of the rentals are minimum of 30 night stays. Our product is more comparable to real estate brokers and monthly or long-term rentals that real estate brokers are doing and not property managers. And so I guess to answer your question, for our business, it would not be exponentially harder to scale to other markets, but there's benefits to having a lot of properties in a market because both renters, like the guests, and the homeowners, start to recognize your business, and it's easier to build a brand within a specific market. It's very hard to compete with Airbnb or Vrbo on SEO, on Google, on SEO nationally, but to compete with them in a specific market for, luxury home rentals, New York City, okay, you can carve out a niche. And so, I think most of your clients probably have niches in different markets, and that's a, pretty good approach.
Were you guys already sort of in the midterm rental space in New York, or did the changes to the laws back in 2013 sort of necessitate moving to midterm rentals? How did that?
We were always in the midterm rental business in New York. Most people don't know this, but rentals were, I think, banned in 2016 under the multiple dwelling law, which meant that buildings with 3 or more units could not, unless they had a hotel permit or were zoned as effectively hotel zoning, could not rent out nightly. That being said, a lot of people broke that law anyway. And so that's why there were 70,000 or however many Airbnbs there were in New York City. There were exemptions to the law. So 1 and 2 family buildings were exempt, although the city didn't like that. And there were other laws that covered those. So we were always midterm, and we, the law change, we also kind of saw coming just given the city, you don't want to be working against the grain. We never wanted to be, fighting a headwind. Basically, we wanted to have a tailwind, which was monthly rentals. We've also found it's just a much better business for us.
So, given that it sounds like primarily around distributing and finding guests for those rentals, how do you guys, and what's the strategy around finding guests and the distribution channels that you guys are using? How has that sort of evolved for you?
Yeah, so we distribute, at pretty much everywhere, not everywhere, but we distribute all the places that we think luxury guests or people renting luxury properties are looking for those properties. And so that certainly includes Airbnb, Vrbo, in some markets, booking.com. And so we also have our own direct booking platform, rovetravel.com. It's, it's an OTA like Airbnb or Vrbo.
And then what is the sort of, I'd imagine going after luxury guests, they have high expectations. You talked about your sort of expectations not being met when you were traveling and sort of staying on Airbnb. So what are some of the sort of biggest challenges you face in maintaining high standards?
I think there's two primary different kind of like areas of importance. One is like the property quality itself, and the other is the service. And so by getting the property quality right, we get a lot of the challenge, a lot we are proactive, that precludes us from having future challenges. So, we won't bring on a property that is not furnished to our luxury standard, and that is not, we have like a scorecard, and we quantitatively evaluate every property across a ton of different metrics. Like, for example, is there, in New York City, this is a big question. Is there central heat? Is there central AC? If there's not central AC, is there a window, unit air conditioner in every room? If you bring on a property that is early on in the Rove journey, I'll just give an example. We had a loft in Midtown that was photographed really well, was really nice, but had like 3 different bedrooms without AC units, and we ultimately had to had to offboard that property because the owner wasn't willing to make the renovations or upgrades for the property, and our guests weren't happy with it. And so there's a little bit of a learning curve in terms of what's the criteria that we need, like requiring central heat and AC. But I mean, imagine if you checked into the Four Seasons and your room did not have central heat or AC, you would not have a good experience, or you would, a lot of guests would be upset. So that's just a small example and part of our scorecard that it's getting it right on the property side. On the service side, it's just resolving issues promptly and efficiently. Most people understand that issues will happen. Obviously, if you have a lot of issues, generally it has to do with the property. If the property is amazing and there's no maintenance or, I don't know, service issues with the property, maybe something comes up, but then it's a question of how you resolve it.
So one thing I've always really associated with luxury travel is their and really high service quality, their ability to go over the top and making sure sort of everything is amazing with your stay, and that sort of justifies the high rates that luxury accommodations like the Four Seasons are able to charge. So how do you guys make sure and you're able to operate at that high service level that luxury guests expect?
Yeah, absolutely. We have a 24/7 concierge team who can handle any guest needs. So they are remote, but then they dispatch someone on the ground if there's like a lockout or there's some kind of issue at a property. We really try and go above and beyond. I mean, for example, like last week we made a reservation for a guest at Carbone on a Friday night. We don't currently offer like a reservation service. We also find that a lot of our guests, they have assistants, or they have their Amex Black Card, or they have they're not necessarily looking for like a restaurant concierge, or expecting that. But something we're thinking a lot about is how can we make our service component, while there might not literally be someone in the apartment with you, because that doesn't really make much, like, operationally doesn't really work. How can we make it as accessible and as convenient as the concierge of a high-end hotel?
Yeah. So I'm operating in sort of the midterm rental space in New York. I imagine, tell me if I'm wrong, that you're not necessarily competing with the Four Seasons for month-long stays. Who do you compete with in this space? And like when the new laws that were enacted in New York in 2013, and it did cause a lot of sort of Airbnb hosts to change from operating in the short-term rental space to the midterm rental space. Did you see sort of an increase in competition after that happened, or how has it sort of evolved?
Well, first of all, I started the business about 3.5 years ago. So we were not around in 2013. So I can't speak
Or
to that.
2023, sorry.
Got
When
it. Yeah.
yeah.
There definitely were some properties that were being rented nightly that became, monthly, medium term rentals. But in general, I mean, I don't think it impacted us very much. What I would say is, you know, basically, so our guests, there's a subset that definitely are choosing us over a hotel, over the Four Seasons or another hotel option. They're coming to New York for an extended stay, meaning 2 to 6 weeks typically, and then they're evaluating us relative to the price of a hotel. That being said, most of our guests they're either looking to book a property, a monthly rental on Airbnb. They are maybe looking at using a broker, a real estate broker, and looking for a property that might traditionally be leased on a 12 or 24-month basis that's furnished, and getting them to do a shorter term lease, or they're coming to us and we're really filling kind of a gap in the market where, especially in the luxury segment, there's just not that consistency with Airbnb that this type of clientele is expecting. And then, hotels are cost prohibitive. I mean, imagine if let's just say you have 3 kids and a nanny, and you're traveling with, the entire family. So you need, a hotel room for yourself and one. So let's just say 3 hotel rooms, one for the nanny, one for the kids, one for, you and your partner. 3 hotel rooms. If you're spending $1,000 a night, that's 3,000 a night. That become on a 1 week stay, that's $21,000. You can rent a 3-bedroom property in a great neighborhood in New York for $21,000 a month. So we do have people book a property for a month that only stay for 2 or 3 weeks. But more commonly, anything above 2 weeks also doesn't really make so much sense for a hotel. You don't have a living room, you don't have common space, you don't have as much privacy as with home rentals.
Yeah. And it seems like your markets that you're in, sort of New York, Hamptons, Aspen, you sort of started in New York and then you've expanded to maybe the places where a New Yorker might travel to regularly. Is that how your expansion has gone, as you've got a group of guests that know you and you're sort of going to and where they're traveling to as well? Or
Both guests and homeowners.
Okay. So it's also part of the homeowner strategy of you've got existing homeowners, they have other properties, and you're able to manage those properties as well?
Correct.
Okay. So maybe that's a good transition into homeowner strategy of how do you go about finding homeowners to work with?
Yeah, for us, it's a lot of word of mouth. A lot of referrals from existing owners. We've had we've had previous guests, someone who booked a property with us on multiple occasions for business or personal travel to New York, actually end up buying a property and then deciding that they want to rent, turn it into an investment property and rent it out when they're not using it. I mean, a key distinction for us and one of the challenges for Airbnb, on the higher end, we don't work with primary residences. So you could not, we only work with investment properties. Owners can use the property part of the year, but they can't use it the entire year. And so, I mean, when you think about a personal residence, the challenge, people obviously will Airbnb their homes for a week or a month at a time. I mean, like the classic, Airbnb use case was Airbnb a room. But the problem with Airbnb a room or your house part of the time is you have all your personal artifacts in the house. And so you don't want to get to a rental and have, see someone else's grandma and kids photographed in the bathroom. And so, part of our process is working with the owner on upgrading the house and making sure that it's truly, luxury home rental and ready for guests. And so I know it's a little bit of a tangent, but part of, how we work with, I guess, homeowners successfully is just by delivering great results. And then, they tell friends that, guests become partners, and, business grows kind of from good results.
Yeah. So what do you see as the main problem you're sort of solving for these homeowners? Is it that they're making a pure investment and need someone to manage that investment, or are they wanting to buy a second home that they can use and want to rent it out to sort of offset some of that cost of ownership? Like, do you see, and you're finding people that are truly like going after, like, I want to buy this property in the Hamptons because I feel like I can generate a good return on it? Or is it that they just want to own a property in the Hamptons?
Well, the majority of people that own Airbnbs globally that are rented out on, on a regular basis, they're investment properties. And they're deciding to put it on Airbnb strictly because they're going to make more money from nightly rentals or monthly rentals than they will from a 12-month lease. Obviously having a 12-month lease, precludes them from being able to use the property part of the year. So we definitely have owners that are picking us for the flexibility, meaning that they can use the property for a month a year, or they want, it's like a second or third vacation home that they do want to be able to access a little bit. But the majority of our property owners are working with us because from nightly or monthly rentals, they can make more money compared to a 12-month lease.
Yeah. And then as you sort of start to think about the expansion of Rove, like how do you evaluate, how do you sort of make the decision that you're going to add in maybe a fourth or fifth market?
Yeah, once we feel like there's sort of saturation in existing market, meaning the number of properties that we're bringing on a month, especially relative to the team size, starts to decrease, or we just have a bunch of homeowners in another market. Like I'll tell you right now, we have a bunch of homeowners, like home partners and guests who who have asked about staying with us in Los Angeles, or about, asked us to manage their homes in Los Angeles and, put it on our marketplace. And so, that's probably a key indicator. Okay, Los Angeles is a good market for us. There's a lot of luxury properties there. Our clients want to be there. Our property owners who own houses in the New York or the Hamptons own houses in Los Angeles as well. So that, there's no specific like metric that we're looking at necessarily, but, we will evaluate a bunch of different factors.
Yeah. And then, how do you see the sort of luxury rental market going the next few years? Like, is there anything that you sort of can highlight on, like, that it's sort of a strong area to sort of move into? It's weak. Like, generally, we've seen that like luxury travel has held up very strong in recent years. There has been a lot of weakness on the budget side of the sort of traveling public, but yeah, where do you see it going?
Well, I think in general, building any business, it's a lot easier to build, with a tailwind where you're kind of taking advantage of a wave or a market trend or something that's happening. And I think, if you look at everyone, there's a ton of US GDP growth, especially, honestly, in the top 1% of income earners, like there's an increasing disproportionate amount of wealth in the high end, the high end of earners compared to the lower quartile. And so I think, a good way to build a business is look at like, what did wealthy people, have access to or do 10, 20, 30 years ago that's becoming accessible to the mainstream market, that's becoming accessible to middle class. And I think, travel is definitely one of those things in general that Airbnbs made much more accessible for, a lot of people that couldn't afford to travel or stay at hotels previously. I think the same thing's happening in the luxury side of the market, where not just Airbnb, but luxury travel accommodations are becoming more accessible. And so I definitely think it's like, as long as there's US GDP growth and more people with more money, they're going to spend more money on housing because that's what people want.
Yeah. When you sort of think about Rove and sort of the business, how are you guys structured? How many people are part of it? Like, what is the focus? And the day-to-day and for the business actually look like?
Yeah, I split time between, we actually have a lot of resources dedicated to our product and our engineering, and, specifically our direct booking engine, like, so rovetravel.com, where you book properties, thinking about the user experience of booking a property with us, everything from the transactional emails, like the email you get when you confirm a booking or you add a person to a reservation, to, that's the digital experience is something we're thinking a lot about for both the guests and the homeowners. And then there's like just the growth of the business, both new properties, guest satisfaction, and operations. And so, I mean, I would say like the three major categories in the business are like sort of the tech and like the digital experience for guests and for property owners, the operations, which is obviously a super core part of the business, and then like the business development, relationships, and growth of into new markets.
Yeah. What part of it do you find most sort of interesting today? And as you sort of thinking about like, and where you want to spend most of your time?
Yeah, I mean, I'm very lucky to have an amazing operations team that is very good at de-escalations and issue resolution, and resulting in great guest experiences. And I think it's extremely reflected in our reviews and ratings. So that's important, but I'm spending a lot of my time on growth, on new market exploration, and on the product as well, on making a better digital experience for our guests and owners.
Yeah. Is there any inspiration you sort of take out there of like, what do you think is best of class on the digital experience out there now for a booking engine?
I think Airbnb, for sure. We've had a lot of challenges with Booking.com. They have a much bigger presence in Europe than in the US for home rentals, and that's why they're a valuable partner. Honestly, is just getting your European clientele. But there's a lot more fraud on Booking.com that we see, at least from my experience, and it's just not as good of a, from home rental side, from marketplace. It's not as good of a user experience. I mean, Airbnb is very famous for being so design focused. Airbnb, I think Vrbo existed as a business before Airbnb did, but Airbnb might have been the first to allow you to actually transact online. But I think Vrbo's a little bit far behind Airbnb in terms of just the entire user experience as well.
Yeah, no, absolutely. They've definitely changed, I think, the expectations of guests around what the experience should look like and feel like for transacting. That is probably, and made a whole lot of companies have to invest a whole lot more than they maybe would have otherwise wanted to on sort of meeting sort of high guest expectations in terms of what a direct booking site might look and feel like. Yeah. So, and wrapping up on sort of the interview, is there sort of anything you think guests should know about sort of investing and operating in the luxury space that, and maybe not as obvious as maybe other types of short-term rental or midterm rental investment?
Yeah, I think it varies. I mean, I don't think it's too distinct from other types of investments. The cap rates in both in luxury properties and in luxury markets, or expensive markets, tend to be lower, and so that there's certainly opportunity, especially around like the value add side. Like if I were looking at a property, I would look at where can you find basically where can you use some kind of asymmetric information to result in upside, because like, are you doing a renovation to the property where you're doing value add work? Is there something about the property that maybe the owner doesn't, because maybe it's just a market that does exceptionally well for short-term rentals, but the long-term lease rate and the rental market cap rate is like actually pretty low, so there's like some arbitrage there. I think like a good market example of that, probably not anymore, but used to be West Palm Beach. Ton of a lot of most of Florida honestly just had a ton of property price appreciation over the last decade, ton of increased demand, very favorable demographic shifts, like population just moving there, people being able to be remote and deciding to be somewhere warm. I don't know if you'll see those same trends over the next decade, especially with the challenges they're having with insurance and hurricanes and property damage. But having some kind of asymmetric information or expertise about a market, I think, really sets you up to do well. I think anyone looking at, an Airbnb or, short-term rental property should be looking at how the property would do as a long-term rental compared to a short-term rental, especially as this short-term rental market might fluctuate a little bit more.
Yeah. No, that's excellent sort of advice in terms of this sort of mindset of thinking of like how how to actually get in. So, Jonah, thanks so much for joining. You mentioned sort of rovetravel.com. Is there anywhere else that listeners might want to take a look at to sort of either connect with you or check out Rove Travel at all?
Yeah, check out our website. They're welcome to email me. It's Jonah, JONAH, at rovetravel.com. And yeah, I mean, we're always looking for new guests and new property partners. So would love to hear from you there.
Well, Jonah, thanks so much for joining.
All right, thanks for having me.